So yeah, really, I come from the prop side. I've been trading for over a decade, but I semi-retired in like 22 to focus on philanthropy. I still share my trading knowledge. I still trade, and this year has been shockingly active. Like last year, I didn't do that much. This year's been pretty amazing for not like a crazy crisis. I would say between like the crypto, then we got semiconductor madness with SMCI, then we got GameStop AMC. Now we're back to semiconductor madness. And I wanted to do a presentation on something that's going to be topical, especially in the current environment. I also wanted to do a presentation that was going to challenge you all to think. We can make this as interactive as you all want. If we're getting a ton of feedback and everything else, and if you guys are comfortable speaking, we'll make it interactive. If not, I don't mind blabbering because I'm pretty good at that. Really, I wanted the topic of my presentation to be this tweet that I had. And I assume you guys can see the tweet as well. But I tweeted, it was actually the top in the semis the day I tweeted this. And I don't think this was coincidental that I tweeted at pre-market. And what I did was I challenged my Twitter followers to ask these questions. With the semi sector on fire and overextended, how do we choose which stocks to mean revert? Being in the right stock can be the difference between riches or losses. Is it better to go for the most overextended stock? How do we even define most overextended? Is it by percentage gain or distance from a moving average or distance above a Bollinger Band? Is it better to go for laggards, stocks like AMD, which couldn't rally at all here? What other variables might we factor in, and how does volume come into play? What about news influencing the moves, which every retail trader tends to chronically overlook? In markets like this, we need to be asking these questions as part of our pre-market prep. I know what these answers for me, and we're going to share them and discuss them. I'd love to hear what some of these answers for you. And then I would say, after we see moves like this occur, we then want to reverse engineer and figure out which stocks moved the best and why, and which didn't. So then I crowdsourced some responses, but we're going to skip that. And really, I'm going to make this potentially interactive with you all. So does anybody want to share, without hindsight, because obviously a couple days have passed, but does anybody have thoughts on this question? Like, what do you all look for when you tend to mean revert anything? Whoever wants to propose something. And if no answers, then I will start sending it in full blabber mode. So Kyle Williams, so gravitating towards the leader, Andrew, overextended leaders. So in this case, I only watched NVIDIA. And my question for you, Kyle, is you said you only watched. Are you not open to potentially trading an Avigo? Are you potentially open to trading a Micron? Those would be some of my questions. And also, what about, like, say, an AMD, where this is a super clear laggard? We couldn't go anywhere at all. So Kyle's open to trading those. Wonderful. So without a doubt, I think for this move, NVIDIA was definitely the leader on this. So there's a couple factors I look like, and I'll discuss why, in my view, this setup was good, but not like A+ for me. Okay, so Kyle Williams was also looking at ARM, but didn't look a second time to take it seriously. So ARM was actually another one I was fairly interested in. So let's start going through these charts one by one, and we can start to deduce what we think of this. So, okay, and Blake is wondering, can you define mean revert? Like I'm 5, if you don't mind. Absolutely happy to do that. So in trading world, for the most part, if you're a directional trader, meaning like we're not making markets, right? We're not sitting on the bid and the ask. We're not a high frequency trader just making the spread in certain things. So as retail traders, as prop traders, generally we tend to be directional traders. That means we need to bet on which direction the stock is going to go. And for the most part, we tend to make money not when a stock is consolidating in a tight range, but when one of two things is happening. The first thing might be a breakout. So if I were to take this big picture Apple chart, we might make money buying this $200 breakout. And so that type of play is continuation. We're betting that the stock is going to continue in the direction it's going. If I'm buying 201 or something, I'm betting that it's going to keep on going. The opposite of continuation is mean reversion. And that essentially is betting that it's going to go back to some type of equilibrium. So as this SMCI earlier this year was going crazy, the continuation trade would be buying this breakout above, I don't know, it was like 357-ish. So the continuation trade is buying this breakout. The mean reversion is betting that we get a little bit too euphoric and then we pull in. So that's what a mean reversion trade is, or as Jose said, a correction. Yeah, essentially a counter trend being put in. So what things tend to be common for mean reversion? If I were to suggest one of the biggest variables, one variable that I would love to suggest is volume. Some of the best capitulations tend to have really, really big volume capitulations. So if I were to look at, say, this ticker GOF, this is a closed-end fund. And what happened was, this had some poor dividend news. And I doubt most of retail world is even looking at a stock like this. Nobody trades random GOF Guggenheim closed-end fund. And so if we were to look at this from a technical perspective, essentially the continuation play was we consolidated in this range. We broke down below 15. So in theory, a continuation trader would be shorting that breakdown. But what happens is we really, really, really capitulate. And notice this huge volume. Here is what I would call volume capitulation. As a measure that I like to look for, I want to see this bar in an ideal world be 2 or 3 times the prior bars, if not more. The more, the better. And so this is this massive exchange of volume. So many people panic, so many people flush out, and that allows for new holders to come in with new price levels. And so often that huge volume capitulation marks a bottom. And for GOF, that's exactly what it is. And so a mean reversion trader would catch this bounce back up. Similarly, if we were to take this Gulf Lima is an insurance company. They had a short report, huge volume capitulation. And now one factor, though, is this was on news. And news generally makes mean reversion less interesting to me. So now what we're doing here as we're discussing this is we're sussing out a couple variables. In a good mean reversion, I'm looking for huge volume capitulation, just a total flush out like we see here. But in general, I don't want there to be super, super fresh news, because with super, super fresh news, that tends to be a new fundamental change to the value of the company. So now let's bring this back to the semiconductors. When I'm looking through these stocks to figure out which is the best semiconductor that might put in a turn, I'm trying to find a couple things. First of all, what's the most overextended? There's many ways to judge overextension. On my charts, I have Bollinger Bands, which is a moving average in this middle line. Then the other lines are 3 standard deviations above and below. So essentially, if you're ever above the upper Bollinger, that's pretty damn overextended. That's just one measure of it. And if you're ever below the lower Bollinger, that's a pretty good lower overextension to the downside. And none of this is perfect, but they're just right. Any technical indicator is just a visual representation of different price action. And by the way, guys, if anything you have questions on, please definitely throw it into the chat, and I don't mind stopping to tackle them, because Blake's question was a very good one. So when I look through these charts that morning as part of my pre-market prep, I'm looking for a couple things. What is the volume like on these up moves? What is the price action like? How overextended are we above some of those measures of overextension? Are we really far from the moving average? Are we getting really above the Bollinger Band? All that stuff is something I look at. And so I'm going to start to type up some of the semiconductors and share with you kind of my train of thought. So NVIDIA that morning was gapping up pretty damn big. This is also the largest market cap stock. Generally, large market cap stocks, especially when you're 3 trillion, you don't tend to go up 4% a day. And so we were starting to be above that upper Bollinger. So that's really overextended. So is the middle blue line the 200-day SMA? No, this is simply just a 20-day, which it tends to be the default on the Bollinger Bands. So we're gapping up above the Bollinger. When we're at about 140, we're a solid 20 points away from that moving average. That's pretty good. That's not incredible. If I look at the volume on this, the volume was okay. Overall, I'd say it was even a little bit disappointing. So now let's type up a stock like AVGO. So this AVGO, though, when I look at it, now we're actually much more extended than the NVIDIA. We're very, very far away from the moving average. The volume is pretty damn good. But now I'm going to throw another variable in here, which is that this AVGO had earnings on this day. So that is something I need to factor in. Again, in an ideal world, this wouldn't have had earnings. I would have loved for this just to have been a normal breakout. So essentially what I'm doing is I'm going through these charts, and I'm going through the different pros and cons. And eventually I'm gonna need to weigh these. And so if I look at, say, AMD, this AMD is definitely the laggard. We're not really going up with the rest of this sector at all. And why is that? That's just because AMD isn't as AI focused as some of these other names. And so while this is a laggard, I'm not really so interested in this stock at all, just because it hasn't participated in this AI hype. Like, I really want to find the stocks that are the most overextended. I want to find the 0.1 percentile of stocks. What are the stocks above that upper Bollinger Band? What are the stocks that are miles away from the moving average? What are the stocks that are doing huge amounts of exhaustive volume? And what are the stocks on no news? So now I'll go to ARM. So as far as this ARM, this had some news in the fact that it's getting added to the NASDAQ. And when I look at this chart, okay, look, we were a little bit above the Bollinger. We're a fair distance from the moving average. But now is another variable I'm going to throw out is this stock was just breaking out to all-time highs. The previous high was here at 164. So this stock just broke out to highs. So that's another variable, which I think is a con. Generally, what I would love is if this kind of much sharper shot up to those highs, and then we failed there before being an actual breakout. And so all these variables I'm weighing, and probably the most important variable for mean reversion is rate of change over time. Just how fast are we accelerating? And now if we pull up NVIDIA, I'm going to take a really big picture view on this. So with NVIDIA, really what happened is we had some of the initial news, I think it was back here actually, back in the spring of last year, NVIDIA had that one earnings where they came out and they pretty much just blew out all of their guidance and got it up huge because of the AI hype. And that's when the whole market was like, oh my God, the AI hype is real. And that's when the Qs and all of these stocks started to really take off. So in my head, I kind of view this as the beginning of the AI wave. And when I look at this chart, essentially NVIDIA went up 20 points over a couple months and we had a long consolidation. So here was another breakout. And this was when SMCI and the others were breaking out. Again, the AI hype was huge. And now look how much sharper this move was. We pretty much rode the upper Bollinger the whole time. And just the slope of this line I'm looking at, this is much, much of a higher slope than this move here. And so now we're moving faster and more aggressively on essentially more AI hype with some nice consolidation. But now here, this consolidation, meaning the time when we're just relaxing and resting, is much worse and much shorter than this patch here. And so sure enough, we have another earnings report, we have another breakout, and NVIDIA now goes even sharper, right? We go from $100 all the way to 140 pretty much in a couple weeks. So now it's almost like the third wave on AI hype. And if you were to ask me what the strongest variable in this whole setup is, I would say it's exactly that. It's that this is the third time investors are getting super excited and getting super euphoric, except now the rate of change is just so much bigger, right? Like for us to go the 50, almost the 50 points we went in a couple weeks, for us to go 50 points before, it took us months and months and months. And that was when the news was first fresh. So a lot of times in my trading, I like to look for kind of like three legs, whether it's on an intraday chart or whether it's on a daily chart or a weekly chart. And I viewed this move to be the third leg. It wasn't perfect because I wanted this to get really euphoric at the end, but it didn't. But that's how I big picture view these. And I'd argue that was the biggest variable in this whole move. So that's what made this whole mean reversion on these stocks so appealing to me, is because, okay, it's fine if we do a couple legs, but if these legs are getting so much bigger and so much sharper, like look what this AVGO did, right? We made our first leg totally manageable, like nothing that crazy. We consolidate. We make our second leg, we consolidate. Then we break out again and it's boom, 1,400 to almost 1,900 in a couple weeks. So now I want to just take a little pause and let you guys ask, were there any questions or what do you guys want me to dive deeper from there? Because now I'm going to kind of tack on a couple ways of how we actually then bring this into practice. So let me know if any other questions. I'll do a little pause where I'm stalling for a little bit, but I'm happy to explain any of that more. And I also think, obviously, the guys recording this, I threw a lot out there as far as variables. And I think this is the type of thing where you'll want to rewatch this video just so you can see the type of variables I'm considering. So question from Andrew, and this is a great question. what would have made NVIDIA a perfect setup for you? Okay, so first let's take the long term. As far as the long-term big picture chart goes, I would say long term, this was pretty damn perfect for me just because of that point I made about this being the first leg, then it gets even sharper, that being the second, then boom, third leg, and we're even sharper. So from a really big picture perspective, that was the most appealing, and that was really, really damn good for me. So now once we dive in a little bit, I think some of the biggest cons on this were this whole move here, it's kind of choppy. What I really want to see is just the bars getting bigger and bigger and kind of like an inverse waterfall where we're waterfalling up. And an example of that, for example, is if I take SMCI. SMCI early this year got really, really euphoric at the end. We had big bar, really big bar, really big bar, and then boom, exhaustion gap. So this SMCI on the daily, this is exactly like these bars here. And that's a little bit too zoomed in. These bars here, these final 3-4 bars, that to me is an A+ daily chart. And that's what I would have really wanted. So now let's go back and compare it to this NVIDIA. Notice how what happened is we start slow in this SMCI. Like we're starting pretty slow here, then it really waterfalls. So the big downside with this NVIDIA is this price action was really, really slow. Like we're just chilling here for a week. We're chilling here for a week. It started to pick up in the last couple days. So I love that we picked up here, but overall, this slope wasn't that great. We're not really above that Bollinger Band. Another big con is this volume wasn't so great. If we go back to that SMCI chart, which fine, I'll just type it up. This SMCI, notice what I said in the beginning about volume capitulation. This volume capitulation here was incredible. Considering the stock is now 3x the price, we still were doing multiples of the volume. So that was a really big deal for me. This NVIDIA, the volume, really the biggest volume days were here and even in these parts. So those were some of the cons. I would have really wanted this in like that waterfall type move where these last couple bars are all huge and up. Are you looking at NVIDIA both long and short setups? No, I'm mostly just thinking short unless this really panics out at this point and goes, unless the pendulum swings all the way to the other direction. Like I still view this big picture as like we were approaching maybe like a 10, maybe we were at an 8 or a 9, and now we've just moved back a little bit. So I really want to see that pendulum swing. Like if this really flushes out to maybe like 100 super quick, then I'd consider it. So then Micron. Yeah, Micron was another chart I wanted to go over, and I didn't touch so much. So this Micron was a little interesting. I'm going to get a little bit more into this Micron when I talk about the practical implications of how I ended up attacking these. But yes, Micron was interesting because one, this didn't have any news here. This has earnings, I think, this coming Tuesday or Wednesday. So this did not have earnings, unlike AVGO and NVIDIA. And it was good. I wouldn't say it was like A+. I do like that these last couple bars started to get way bigger, and I'll touch a little bit more on that. But yes, Micron was interesting to me, and this was one of the ones I ended up shorting. Armet asks, for the overextension, is it the daily Bollinger that you always look at? Because of example on the big picture weekly Bollinger, there were many instances that NVIDIA pierced the upper range. So it's not that something can't pierce it, like it can do whatever it wants. It's just really one measure. So yes, there's other times where it's pierced. And so that's just one factor I'm going to be paying attention to. I want everything to align though. And so yes, I definitely was watching this even back then for a turn, but my thinking isn't so simplistic where it's not like if above upper Bollinger equals short. Right? I do a lot of all these variables coming together to help with the process and everything. So, and as you mentioned, yes, of course, because these are essentially moving averages or derived from the moving average, as the more time passes, those Bollinger Band and the moving average do end up catching up over time. So yes, it's just one indicator. But I was interested even in shorting here, right? And the point isn't that this is necessarily going to be a big picture top forever, but I do think this reversal was somewhat predictable on the same arguments that I'm making for the current one. Do I prefer Bollinger Bands better than RSI? Yes, I do. I do prefer Bollinger Bands over RSI. I just think visually I just enjoy it being on the chart. Essentially, RSI and Bollinger Bands, they kind of measure something something similar. But I do find that there's times where I'll even precisely use a Bollinger Band where we go from like the top of the Bollinger all the way down to the lower super fast. So there are some nuances that I won't get into here of why I prefer Bollinger Bands, but in essence, they kind of do similar things. What's the longest you've seen a stock go and stay over the upper Bollinger Band? So that's a good question. So stocks can spend a fair amount of time over the upper Bollinger Band, but they can't really run like that forever. And just because a stock is above it doesn't mean it's going to collapse or anything. It's just one factor, because what you can do is a stock can stay above it and then the slope might just become a little bit less strong. So you could go above it, then just kind of fade off a little bit. You could just consolidate. So it doesn't really portend that something will crack. But in general, if something's going more and more stretched, like what I really want to see is not just are we above, but the rate of change. Are we increasingly more and more overextended and stuff? That's kind of what I want to see. What's your trigger when it gets that extended? Okay, so that's what I'm going to touch in the next part. Is the steepness of pullback a factor? So in general, like steepness of pullbacks is always important. Like take this arm, because this stock failed 120 and broke down hard. Like I'm sure there's some traders that would have bought this breakout above 164 or whatever. I'm never ever buying this breakout just because of how weak this was here. So this depth of pullback made me highly uninterested in buying this. I really want to buy the stocks that consolidate really, really tightly. So if we look at like in Nvidia, this held up better than ARM, but this was a little bit concerning. In some of the best ones, like if we look at SMCI before this broke out from here, this was holding up super, super tight. If we look at this AVGO on this breakout, this was holding super, super tight. So I definitely look at how tight consolidations and pullbacks are for sure. And I think that's something that's worth like databasing and building charts in Evernote. Is the mean reversion better for large caps only? Absolutely not. It works for all, like these concepts work for anything, not just stocks, but it works for futures, it works for crypto. Technical analysis I view as just being a framework that works for all of it. So now I'm going to try to touch on the practical part, and then we can go back to a little bit more questions. So as I think it was, JJ asked, from the practical side, what's your trigger when it gets that extended? What do you look for when it's time to start in? So that's actually some of the most important part, right? Like concepts are great, like knowing something's overextended is great, but how do you actually capture it? And that is where you need a whole system to actually capture these things. And so one of my concepts that I talk about a lot is called the right side of the V, which is essentially you wait for something to put a turn in rather than shorting this AVGO on the way up. Like if this is the V going up and going down, I want to wait for the right side of it over here. And so how do I define that? A lot of times for something going up, that might just be break of prior bar lows. So for this AVGO, for example, what I wanted to do is I wanted to short prior bar lows. And so the lows of this day, this low is held the next day, this low is held the next day, this low is held the next day, then this low finally gets broken on this day. And so this low was 1785. And so this is something where I'm not opposed to shorting that break of the lows at 1785. And because I'm using the daily chart, a very simple system is I'm going to short the break of these lows on 6-20, and then I'm going to use a trailing stop of prior bar highs. And so that's exactly what I did in AVGO. And I'm actually still short because prior bar highs haven't been broken. So if on Monday, this high at like 1714 gets broken, I'm going to cover. I have taken some off into this down move. So that's one way. If we take something like NVIDIA was something where we gapped up a lot. And so on really big gap ups, I might then be looking for an intraday entry. And so if we go back to this day, so if we were to look at SMCI when this was topping or NVIDIA the last time that this topped, a lot of times this year, these stocks have been making an opening drive. That opening drive has failed. And then probably around 10 a.m. or so, a lot of these stocks have rolled over. And so for me, one potential entry on an intraday basis is you can short this break of lows. So if I'm trading intraday, you can short this break and use prior bar highs and catch this leg. And so then even when we roll over again, I'll short that rollover. And if I want to trade this more big picture, like if I want to be in, like overall, I was pretty bearish on these things this day. So I wanted to hold some stock the whole day. So for me, once we broke here, having seen how many times this was kind of the death of NVIDIA earlier this year on its big days, as well as SMCI. So pretty much I shorted here and I was just going to hold that big picture and then just give it to the day's highs and then use my daily stop. So what I did was I shorted my size on this break and I was just going to give it to highs on the day. And then once this kind of kept failing, I'm now giving this prior day highs. So yesterday, Friday, my stop was going to be all the way up at 140. We continued weaker. So now my stop is at 130, whatever. So that's just going to keep trailing down. But that's how I worked into that one using the intraday. The final one that I shorted, actually, I'm short ARM too. So now with this Micron, because this was inside this bar, there's really two places you can potentially short. You can potentially short in this bar, giving it a high of prior day highs. And then the add is when we break below those lows. And so that was something that was interesting for this one. Then ARM, this ARM wasn't my favorite. So ARM was probably one of the ones I'm smallest in. And that was because, again, this is breaking out to highs. This has that index edition. This volume isn't that great. A lot of these bars aren't that great. So that being said, I was just shorting the break of prior bar lows here and giving it to the prior day highs. So I'm in this one, but this is the one I'm more skeptical of. I think if I had to rank them all, like NVIDIA was pretty damn good just because the market cap's so insane and it's the leader, it's the third leg. The AVGO was interesting to me despite this move being on earnings, just because that's such a big move at this point. The Micron was good. I'd say the pro for Micron was simply that this didn't have any news at all. This didn't have earnings in there. Like this was just going kind of on nothing. I would say overall, like all of these to me were kind of like a B plus, A minus. None of them were A pluses by any means. And all of them had their own pros and cons, whether it was the volume, whether it was news, whether it was how extended it was on the daily. What are filters we can use in order to backtest and create a database of exhaustion gaps? There's a lot of different ways to backtest this stuff. So one thing in general for filtering for these, and you can actually somewhat backtest on this, but it's not as good. To filter for these stock patterns, I definitely recommend stockfetcher.com. Like this thing, I don't think anyone really knows about, but it's criminally cheap. Like I think it's something like $130 a year. And it's really, really robust daily chart filtering. Not for intraday, it doesn't do anything intraday, but for daily chart setups, you can really filter for anything under the sun. Very robust, very good. And so what you can do is just start tracking some of these setups, tracking some of these variables. I have multiple scans over time that I'm kind of running. And, then honestly, or just go back in time, stuff like the Tesla, the SMCI, there's probably other ways to backtest this, but even with StockFetcher, you can go back in time a little bit. It's not super easy or amazing where it's just, oh, here's the magic, but there is a way to manually just go back in time using that. So this is an important question from JJ. Do you like shorting weakness better than shorting into strength on the very overextended plays? So I look for one of two things. So with this SMCI, this was really, really, really getting overextended. When this is trading up here at 1070, I don't want to wait for prior bar lows all the way down here at 900. I've already missed then 200 points of the move. Not that I won't potentially add there, but that's where when we're really, really, really overextended like this, I want to look for an intraday entry. So actually, let me see if I can pull this up. So notice this pattern here, and this is exactly what we saw in NVIDIA the other day. We made that opening drive, we failed, we break those opening lows, and then it just is done. So that's important. So remember this. So when it's overextended like that, I want to short intraday and find my entry that way. So now hold that thought and remember what this looks like. So like I was saying, this did its opening drive. We then fail and break that opening range, and then it's just game over for the stock. So that was SMCI. That was NVIDIA the first time. And then even, like I pointed out, NVIDIA the second time, it does that little opening drive attempt, breaks those lows, and then, yes, this bounced back, but it still was big picture game over. So one way is I'm looking for that intraday stuff, for the stuff that's very overextended, but for the stuff that's not really gapping up, that's where I'm going for the break of prior bar lows on the daily. Like this Avogo this Avogo is very, very typical of something I tend to do. where it breaks prior bar lows. I do my entry and then just trail it using prior bar highs on the daily. So that's a very typical way for me to get in once the turn is in. I know that was a lot of information. That was a huge amount of information. I know I was throwing it at you just because, if this wasn't recorded, I probably wouldn't have covered so much. But the nice part is we can rewatch this. The takeaways I really want you all to walk away with from this is the variables that I look for in mean reversion and how I'm really going through the different pros and cons. Andrew's asking, was there an A+ semi-short? I don't think this past move, anything was so A+. I mean, I think this AVGO was A-. I think this NVIDIA was A- to A. The best setups, I think, so far this year, like SMCI, this was A++, mega plus. I think this SMCI was one of the best opportunities of the whole year. NVIDIA on this day, I think, was very good. I'd say this move was maybe a little bit better than the one from a couple days ago. But of the last couple days, there was nothing that was, for me, A++. The best I would give these, I didn't go nuts. I shorted, but not crazy aggressive. I wasn't going super madman. But let's put it this way. All of these moves were big enough that I felt the need to be in them. I knew that we were on, just based on all those criteria I mentioned, just being the third leg and how we're starting to accelerate, it was enough that I needed to be in it to win it, but I was not going for any mega home run. And yeah, that's exactly what Ken said, is the whole point of this is right. I recognize no one's going to be able to take all this information and immediately execute it, but ideally it's teaching you all to think and consider variables that you haven't considered, to consider that a lot of this stuff is kind of the weighted average of, okay, it's the third leg big picture. We're starting to get really extended. We're somewhat above the upper Bollinger, but the volume is just okay. It's been a little bit slow and trudgy in here. So it's starting to hear those variables and weigh those and then see how can we use the system to execute it? Not a magic bullet, but just simply a way of thought. Couple quick things. Cameron asked, when will we have more info on Magnum Opus? For those that don't know, pretty much I've enslaved my life away to trying to create the greatest trading course of all time. Most of it will be free. Proceeds will go to charity. I do have a landing page up for email updates. I'm hoping to get this launched by year end. I've easily spent 500 plus hours on it. I have 150 topics or so I plan to cover in short little videos. So feel free to sign up for that. Again, most of it will be free. Proceeds will go to charity. So, do have a bias there. One final thing I'll touch on, Craig asked, how do you decide where to cover the shares? So this I could probably speak another 5 hours on. My very simple answer is going to be for stuff like AVGO, the more we pull back, my target's this moving average, the more we pull back, the less, in general, I want to get less the more we pull back, but my full stop is going to be break of prior bar highs. So this day we held the prior bar highs on that day. This day, which was Friday, we held the prior bars on Thursday. As long as Monday holds below 1710 or whatever this is, 1714, I'm at least going to have some shares. If we were to magically just melt down to 1500, I would get flat. Even for NVIDIA, generally my stop's going to be the same thing. So on Friday, my stop was 141 or whatever. On Monday, my stop is going to be 130.63 or whatever. And again, I'm probably, if we get close to 120, this one I'd hold a little bit longer because we're breaking down from 100. But even by 120, I'm going to start to take off size. So it's kind of more of an art than a science over how these develop, where I'd really need to, so even if we were to take Micron, for example, this one I was short. This one melted to the moving average. That's a pretty damn big move. And the prior bar highs were all the way up at 160. So because my stop was all the way up there technically, and we went all the way to the moving average, this one I just straight up covered. I know I just threw an insane amount of information just in that one answer, but that's kind of the basis of my thinking. And again, I highly recommend utilizing the recording for this because I recognize this was a ton of info. Well, thank you all. Thank you all for attending. Thank you all for the great interactions and the questions. And if anything else comes up, give me a holler and let me know if I can be any more help to you all on your trading journeys. Thank you so much, guys.